We continue to dig into this morning's May jobs report. Let's bring in Vice President and Director of the Institute for Economic Equity at the Federal Reserve Bank of St. Louis, Bill Rodgers. Bill, always great to get some time with you. One of your first takeaways on the report.
Well, I think it's a very good report. It's a nice, solid report in the sense of the job creation numbers over the month were strong, which I think will continue over the next few months. And so we will get back to where we were pre-pandemic. I also like the slight tick up in labor force participation because that's where I feel that when we get back to pre-pandemic, I'll celebrate, but I also don't want to celebrate that we're at full employment. We won't be at full employment even when we get back because prior to the pandemic, or just the pandemic started, we had about 34% of American households who would have difficulty or could not have paid an unexpected $400 bill. And that's not what we want to be.
Bill, Brad here. Always a pleasure to speak with you, and particularly continuing to track some of the inequities in the data as well. You know, even as we look among the unemployment rate right now that sits at 3.6%, you look across some of the worker groups, and ethnically for Black Americans, it's at 6.2%. For Hispanic Americans, that's at 4.3%. What will it take to start to narrow that gap?
Well, that's a great question, and I have a blog post that came out a few weeks ago that tried to assess that, and particularly focusing on the role of a strong economy. And what we found was that young, less educated minorities who are about 16 to 24 years of age, they do the best in terms of improving absolutely, but also beginning to narrow that gap if they are in states or communities where the unemployment rate has been not only below 4%, but below 4% for a sustained period of time. And we found that was around 12 to 14 months where you began to see not only everybody recovering from the pandemic, but the young minorities who are at the lowest rung of the job ladder began to narrow relative gaps, and that's in employment. So we're going to continue to monitor that, but that's a good news. And that's another reason why it's so important that we continue to have a strong economy, continue to have an expansion that we've been have had as we came out of the pandemic.
You know, Bill, further along that, though, there's also this kind of added thread of the number of employed persons that essentially are people of color that are in the services industry, that are going into jobs. And that comes back to wages as well in this conversation because of the impact of the real wages that they're actually going to see because of the need to go into an office, to spend on gas to get somewhere, and not being able to work from home or work virtually to still make sure that they are getting the paycheck at the end of the day, too. And so where we're seeing that issue kind of exacerbated, is there a fix that can be put in the near future?
Well, there's no silver bullet. I had written a piece for the Russell Sage Foundation in a volume a number of years ago where we took on this very issue. And a lot of people like to pin you down and say, well, you know, what's the one thing you would do? And I get it because, you know, there's only a fixed amount of resources. But these are gaps or differences or disadvantages and challenges that these particular groups have faced over decades. And so it didn't emerge overnight. And what that means is you have to do work in education and training, working on improving soft skills, but you also have to focus on employers. And one of the great things about this economy, by running an economy so warm that it forces employers to rethink their attitudes or their perspectives about who's employable, and because they need to get people into the workplace. And then third, there's a whole set of policies that can be done, such as raising the minimum wage, and there's strong evidence to show or suggest that some of the wage growth that we've been seeing, particularly on leisure and hospitality, it is a result of trying to attract and retain employees. But there's also this institutional effect, and then the pandemic relief and recovery efforts really showed that those kinds of efforts can make a difference, and they do make a difference. And then finally, just using those again, the policy lever that overall in these different buckets really can help out, and has been shown to help out.
We've seen layoff announcements really pick up from very large companies over the past week or so. Is it fair to still call the U.S. labor market tight?
Most definitely. We haven't had an unemployment rate at this level for a very, very long time. And also, just to my earlier point about it being sustained, it's tight, but are we at a full employment level? No, because for those group of young men and women that I've focused on in that recent blog, their unemployment rate is still around, I think, 14 to 15%, we estimate it, which is not full employment to me.
It comes with the reminder here that those that are employed and even those that are unemployed, they are all consumers too. And in a consumer-driven economy that we live in, I mean, at the end of the day, if you do see consumers trading down or picking and choosing where they are spending or spending strategically in the face of some of the recessionary warning signs that they may be feeling, how does that impact even the opportunities for employment going forward if we do see, to Sazi's point, some of those jobs either be pulled back or the hiring freeze is instituted?
Yes, I was in Memphis over the last few days, meeting with our bank boards and meeting with a variety of community stakeholders. And one of the conversations I was having with folks was talking about what we call, or estimates that we generate called black buying power. And just even for Memphis, if we were to narrow or close the income gap between blacks and whites there, we were estimating that's an additional $5 billion in buying power that could stay in the community and be spread out to households who were then going to consume, and then also spread, and it's going to be spent in these businesses. And so it's one of our 4 cases for equity that I've been trying to talk about and educate people on, that when we do work to lessen these inequalities, whether it be in jobs or wages, that they can help the corporate bottom line. And then also being at the National Civil Rights Museum, which was a really honor, and just referencing some of the work that Dr. King had done in 1966, where he's talked about he made this comment about how job creation is harder than actually voter roll creation, and he's talking about job quality. But it comes back to the essence of your question, right? That again, we have to continue this expansion. That's the first ingredient to helping and addressing these equity issues you raised.
And Bill, when you talk to these leaders in business and other contacts in your network, do you get the sense they are planning for a recession?
Not right now. Not right now. I think, and this is really important because so much of the next direction we go really does, center around people's expectations. I think right now, for the most part, people are reporting and sharing that some of the professionals like, wow, this economy is so strong. Why is it that we still can't get these other young people into the labor force? That's still the big question.
Vice President and Director for the Institute for Economic Equity at the Federal Reserve Bank of St. Louis, Bill Rodgers, always a pleasure to speak with you. Thanks so much for joining us this morning.
Yeah, gentlemen, thanks for having me.